Hey investors! Lululemon has been in the news because big share price falls and investors are wondering whether it would be a good buy or not at current levels. Lululemon Athletica Inc. is principally a designer, distributor, and retailer of athletic apparel, footwear, and accessories. The women's range contributed to 64% of the revenue and the men's 23%. They operate in three segments: the USA, China, and rest of the world. They operate in over 25 countries. In 2023, 79% of the revenue was from the USA, 10% from China, and 11% from the rest of the world. This compares to 84% from the USA, 7% from China, and 9% from the rest of the world in 2022. The revenue from the USA increased 11.9% in 2023, and the revenue from China increased 67%, and the revenue from the rest of the world increased 42%. They conduct their business not only through company-operated stores, but also online retailing. The company's revenues are very seasonal, with nearly 43% of the revenues from the last quarter of the year. In 2023, the net revenue increased 19% to $9.6 billion. On a constant dollar basis, net revenue increased 20%. Gross profit increased 25% to $5.6 billion. Diluted earnings per share were $12.20 for 2023 compared to $6.68 in 2022. Adjusted diluted earnings per share were $12.77 for 2023 compared to $10.07 in 2022. The operating margins increased from 16% to 22%. The total cumulative shareholder returns from February 2019 to January 2024 is 300% compared to 180% for the S&P 500. Financial metrics: share price, $254. Market cap, $32.5 billion. Price-earning ratio, 20.5. Dividend yield: the company does not pay any dividend. Total debt, no debt. They have $1.9 billion cash on hand. For the first quarter of 2024, compared to the first quarter of 2023, net revenue increased 10% to $2.2 billion, or increased 11% on a constant dollar basis. America's net revenue increased 3%, or 4% on a constant dollar basis. International net revenue increased 35%, or 40% on a constant dollar basis. Comparable sales increased 6%, or 7% on a constant dollar basis. America's comparable sales were flat compared to the first quarter of 2023. International comparable sales increased 25%, or 29% on a constant dollar basis. Gross profit increased 11% to $1.3 billion. Gross margin increased 20 basis points to 57.7%. Operating margin decreased 50 basis points to 19.6%. Stock repurchase program. During the first quarter of 2024, the company repurchased 0.8 million shares of its common stock for a cost of $296.9 million. On May 29, 2024, the board of directors approved a $1 billion increase to the company's stock repurchase program. Including this increase, as of June 5, 2024, the company had approximately $1.7 billion remaining authorized on its stock repurchase program. The company ended the first quarter of 2024 with $1.9 billion in cash and cash equivalents, and the capacity under its committed revolving credit facility was $393.8 million. For 2024, the company continues to expect net revenue to be in the range of $10.700 billion to $10.800 billion, representing growth of 11% to 12%, or 10% to 11% excluding the 53rd week of 2024. It continues to expect operating margin for the year to be approximately 23.3%. Diluted earnings per share are now expected to be in the range of $14.27 to $14.47 for the year. This assumes a tax rate of approximately 30%. Power of 3 times 2. The company's Power of 3 times 2 growth plan calls for a doubling of the business from 2021 net revenue of $6.25 billion to $12.5 billion by 2026. The key pillars of the plan are product innovation, guest experience, and market expansion, and the growth strategy includes a plan to double men's, double e-commerce, and quadruple international net revenue relative to 2021. So although the company is growing, the growth in the USA is now almost stagnant while the growth in China and the rest of the world is still strong. The slowing growth in the USA is the main reason for the stock fall, as the majority of the earnings are from the USA. So it can no longer be traded at a high PE ratio for a growth stock. A decision on whether to invest in the stock or not will depend on how confident the investor is on the growth prospects of Lululemon outside the USA. Also, we need to keep in mind that 43% of the sales are in the last quarter, and so hopefully we can have sales growth pick up in the last quarter. If we look at Lululemon weekly chart, we can see that the price was at extreme valuation between 2021 to 2023. Price has now come to a technical zone, which can provide support. But ultimately, the share price only moves up if expectations for growth are confirmed. Also, a lot of technical damage has been done on the chart. The 20-week moving average has crossed the 50-week moving average to the downside, and this is bearish, and any bounce will be sold off. Price is likely to be supported in the zone, but we need support to form in this zone before price can move up. When we compare the stock with S&P, we can see significant outperformance and has now fallen, potentially offering an attractive entry point. But price can potentially trade up to half of the zone to around $200, and we can never know for sure how far the stock can fall. Although they are doing share buybacks, they do not offer a dividend. For this reason, we won't be interested in the stock at current levels until we have a period of consolidation in this area. A strategy involving options might be a better way for someone who is interested in the stock at current levels. There are 2 ways of doing this. We can sell a January 2026 $220 put option and collect the premium of $27.37. This obligates you to buy 100 shares of Lululemon for $220 at any time till expiry in January 2026. If the price stays above $200, it is unlikely that you will be assigned the stock. If the price goes below $200, then you may be assigned. The risk is that the stock continues to fall below $200. However, this strategy is better than a strategy which involves buying the shares alone at the current levels. Another way to use the option is to buy the stock within the zone at a price that you are comfortable to buy and sell a January 2026 $300 call. This is currently selling at $41. We collect the $41 premium. It obliges us to sell the stock at $300. Just to illustrate, let's suppose we buy the shares at $250. Then if the shares do get taken away, our total returns will be nearly 35% in 18 months. That is a great investment return. The downside again is if the share price continues to fall, then the investor makes a loss if price goes below $210. This is because we collected the $41 premium. Again, this strategy would be better than a strategy that involves stocks alone. So the Muffet advice is to wait. However, the option strategy do look tempting, but we won't be taking those trades. The above ideas are for educational purposes only, and we are not financial advisors. Please do your own research before investing. Please like and subscribe if you like the video. Please comment on it and let us know what you think about Lululemon.